See how the recording is going. Can everybody hear me okay? Well, not too much delay. That's good. Got about 17 people on. I think it's probably enough to kick it off. I also made a bit of a change here, guys, to display my whole screen instead of just my um, uh, Chrome browser. So hopefully that lets you see the mouse on the screen. It looks like it does. So that might make things a little better for us. All right. Welcome to week 7 of the Rational Investor School for Trader Development. This week we are talking about candlesticks. So, where this fits into the whole scheme of things is most setups typically have 3 components. Certainly the setups that I'm going to be teaching you have 3 technical components, right? As we've talked about before, you always need at least 3 reasons for a trade. So I guess it could be said that all setups will have at least 3 components, right? But they won't all always be purely technical setups. I'm sharing with you technical setups, and we're using those technical setups within screened assets that are screened for fundamentals, right? And that's how we get to the rational analysis piece. But some setups you may design that, or you may find that people have created, which have, for one of their reasons, a fundamental reason, and that's fine, right? Um, but setups that are technical in nature, those reasons are typically in these 3 categories. Location, and that's what we learned last week with Fibonacci retracements. And momentum, which we're going to be working on for the next 3 weeks. We have 3 different types of momentum indicator. I include in my setups all of those 3 plus RSI. Which we don't explicitly go over in this class, but we do have some really good videos on it in the TRI library. And then the third reason is market structure. And we've learned M's and W's, 3 different types of triangles, and heads and shoulders, and inverted heads and shoulders. Those are fit into that market structure category, and so do the candlestick patterns that we learned this week. So all of those together are the market structure reasons for the trade. Okay, so that's where this fits in. I'll make sure I've got my. Bear with me a second. I'm trying to make sure I catch any questions you guys have as you have them. And of course, my stuff's in a little bit of a disarray. I apologize for that. Okay. Um, all right, let's get into it. Thanks. So Joshua just posted a link to the RSI video that Brian put together many moons ago. It's absolutely just as relevant today as it always is. All right. All right. So what Brian covers more in depth, we're going to touch over briefly, as usual. Then we'll go to the quiz. Then we'll go to the Q&A sheet. Looks based on the Q&A sheet like we're probably going to have some extra time for me to go over a couple extra things. What I'd like to do is hit some of the things that have been posted into the shared log, and then I'd like to walk through again, and I don't mind doing it kind of ad nauseum, like doing this and then doing it and doing it again, walking through my process that I do for hunting for trades. Okay. All right. So in Brian's video, he describes. Oh, and just so you know where I'm pulling this up from. So if we go to week 7. And you go to the download button here, what comes up is this document right here. So you can bring that up and follow along as we're talking about it now. I do recommend when you're watching Brian's videos, take the time before you start the video and grab the slide decks and walk through the slide decks as he goes through them on the video. Have a separate document open where you can put questions that you have as you go through the lesson, and then that helps you hopefully find the answers to what you've had questions about um, as you go through there. And if you haven't found the answers, then of course reach out to me, and I can talk about them like I am this week during the Q&A session or during the office hours. Okay. Okay. So Brian defines the Japanese candlestick charting technique. We look at three common reversal patterns. Okay, we look at fractals, which is our 3-bar pattern. Um, you look at our engulfing patterns, and which are outside reversal patterns, and our haramis, that are inside reversal patterns. Those are our 2-bar candle patterns. We do also talk about some other 1-bar reversal patterns, and another 2-bar pattern that we call the railroad tracks. So railroad tracks. Oh man, my speaking part of my brain seems to be firing a little weird today. Apologies, guys. All right, and then we talk about how we use candlesticks in trade entry process. Okay. All right. So candlestick patterns come from. It's a charting technique that comes around to Japan. Okay. It was developed several hundred years ago by Japanese rice merchants to track the price change in rice, help them calculate a number of things, but it was used, I think, initially to track rice for military campaigns because they needed to track how many uh, basically how many men worth of rice per day was needed, right? And so they had to track the price of all of that so they could make sure they had the money in the war coffers. Okay. Instead of dashes on a bar, which was traditional um, Western charting, it draws a box with the open at one end of the box and the close at the other, and then a wick and a tail showing the lowest price that the asset went to and the highest price the asset went to during that same time period. The color of the box uh, is different whether the close is above or below the open, and each individual candle has a meaning both as a candle body, where did the price open and close, which is what you see when you do a line chart. You'll just see, well, you don't see the open, but you see the close and you see the previous close, right? Um, and the candle has meaning both in terms of the candle body and the wicks and tails and how those are interpreted. The color differential really helps the reversals to stand out as you're looking at patterns. And obviously, the reason we use it is because we have some historical reliability with bullish and bearish patterns. There's a lot more to candlestick pattern analysis than we have time to go into in this week. We're going to give you the highlights and the patterns that we use most frequently, but there are people who have spent their entire life, their entire career, just studying candlestick patterns, and there's a lot more to it than just what we're showing you. Just know that. All right, so let's talk about the particular patterns. Make sure you get chat open over here as well. Okay. Um, so we're going to talk a little bit about the anatomy of a candlestick, right? So we talked just now about the body. Let me blow this up a little bit so you can see it better. We talked a little bit about the body being between the open. So on a green candle, the open's at the bottom and the close is at the top. The body shows the open and the close, and then the wick shows the highest high of that period, and the tail shows the lowest low of that period. Okay, and for a bearish candlestick, it opens up at the top here and closes down here at the bottom. Okay. There is a type of candle we refer to as a doji, and a doji is a candle where you have a relatively large wick and tail, and somewhere around the middle of that wick and tail, we'll see a small candle body where the open and close are very close to each other relative to the size of the candle. And what we use this to represent is indecision in the marketplace. Okay, This can occur at the top of a bullish pattern where the market's undecided and um, where we're seeing whether it's going to reverse or not. And if it's at the top of a pattern, obviously, then the reverse happened. It can happen in the middle of a pattern where we had indecision and they were thinking about putting a top in there, but then it continues on up. Conversely, if you're looking at a bearish trend, it can happen mid-trend or it can happen down at the bottom of that trend, right? Um, all it tells us, a doji, really is right at this point in time, when we see this doji, we have some indecision. Okay. Now we've also got um, some single candle pattern reversals. Okay, and what we look at there, besides the doji, is we look at the shooting star. That's where we have um, a long wick, and then we have a small candle body at the bottom, and we have a hammer where we have a long tail and a candle body that is small near the top. For single candle reversal patterns, it does not matter what color any of these are. If there's indecision in the marketplace, it doesn't matter if this is ultimately a red or a green. Similarly, for a shooting star, it doesn't matter if it finished green or red, and the hammer doesn't matter if it finished green or red. The shooting star is a bearish sign because it means the price is explored up here but been pushed down. So it doesn't matter if it finished up a little bit here, green. What matters is that during this thing we had exploration of this whole range, but price closed down here really low. And for a hammer, it doesn't matter that whether this is green or red. What matters is that we explored down here and then we're pushed back up here and closed up high. Okay. Um, the two bar reversal signal, the one that we look for. We're going to talk about a few other ones, but one of the ones we look for because it's very, very powerful is where we see this here. We see two candles. Um, like this is a bearish reversal signal because price went up and then moved over here and then moved down. What we look for is that there's very little wicker tail and that those end at the same level and that the body ends at the same level. What I mean is the price went up to here and opened at the same level, maybe explored a little bit above but not much, and then pushed down and closed um, down here, right? Mostly body. Um, the what I'd like to see is that there's very little wicker tail, that wicker tail um, ends at about the same level, and that the candle body absolutely ends and begins at the same level. Okay, um, and that is extremely powerful. You very often when we see a railroad track, that signals a reversal. Okay, not always, nothing's always, but very often. Okay, then we get into our 3 bar reversal pattern. We call a fractal. Okay. Well, I mean, it's called a fractal. That's just the industry term. But um, what a fractal is describing, really, is on a lower time frame. What we're seeing is like a head and shoulders. Like he shows here, inverted head and shoulders. Okay. And on a higher time frame, what we see is something like these 3 um, candlesticks. Because what we're describing is that price finished, um, like in the case, well, here, let me show you on here. All right, so this fractal here. Okay, let me put a box around it. Okay, this fractal here. We had it finish here, then finished higher, like explored higher, and then finished here a little lower. And this is not the best example of a fractal. I could probably find a better one if I spend a second looking for one. Yeah, let me do this. Let's look at this one over here. This is a better one. Okay. I just say it's better because this one, it looks like it um, closed. This third one closed about the same level. I think it's technically a fractal. It looks like it's off a little bit, but I want you to be able to see it a little better. Okay. This is on a daily. Okay. So we closed here, then we finished higher, then we finished lower. Okay. That's and really it's the highs that we're looking at. So the high was here, the high was higher here, and the high was lower here. That's a bearish fractal. Okay. Conversely, a bullish fractal, we can see one. Well, we can see one actually right here at this peak valley. Now, when I said earlier, when we were looking at where do we identify pivots, right, to draw our fibs from, fractals can be really useful for that. Um, if you're looking at higher time frame pivots, if you just look at fractals, you're going to get a good indication of um, kind of areas to identify. Now, I don't have a script for this. I just do this visually, right? Let me throw a fractal indicator on here. This is a custom indicator that I think Joshua put together that will show you fractals out of the box. Here's what it'll do. It'll color your candles out of the box, right? So I turn that off just for simplicity's sake. Um, But then what we're going to see here, and you'll see by default it goes to 3 bar fractal. You can set it to a 5 bar fractal, and that will be fewer signals, and that's fine. But we're okay with a 3 bar fractal in here. And just leave the number of periods at 2 for right now. But what we're going to see here is this puts markers on the chart for where each of these fractals appears, right? Now what I'll do is I will look at groupings of fractals, okay? So I'll look at like fractals of fractals, okay? So this here signal has this fractal and then this fractal and this fractal. So it's like a fractal of fractals, okay? Um, and so that's a good pivot for me. And I call that like second order fractals is what I usually refer to that as. And then we can see down here we've got a fractal of fractals here. Now, what I'd like to do is get a script put together, I just haven't done it yet, that shows third order fractals. So it's fractal of fractals, and I think that's going to give you your true pivots, right? But I just haven't gotten that script put together yet, so you're going to have to kind of do that in your head, unfortunately. Um, but these pivots are very good. These fractals at peak tops and peak bottoms are really good places to put your Fibonacci retracements. Okay. All right. So as Brian describes in here, a fractal is really nothing more than a zoomed out, so a higher time frame view of what's a head and shoulders on a lower time frame. And we learned about that head and shoulders market transition pattern previously, right? Because we're talking about a market and transition pattern, because we're talking about head and shoulders, well, some of the things we can say about a head and shoulders is when a head and shoulders comes in, so when a fractal comes in, and when it fires, um, what we can expect is that the distance from the high of the middle fractal to the neckline, which really we're going to need to look at the pattern here for the neckline, um, we're typically going to see a 200% extension off of that, right? Uh, Now, often we're going to see more than that, but that's kind of our conservative placement, right? Um, what else? I think that's about it. Fractals are really important. You can see they occur a lot throughout the course um, of an asset's price movement. So it's really incumbent and important that we look for fractals as that third reason, market structure, right? So we will already have looked at location. And I do these in this order, folks. I look at location first, then I look at momentum, which, like I said, we're going to learn in the next few weeks. And then I look at market structure. So then I'm looking at looking for fractals or something like that. Okay. Um, I really like W's where the two lows on the W are fractals. That's very that's a good, as opposed to a sufficient W. That's a good W. Okay. Um, and if you remember, what I mean by that is, with if I don't have those fractals in my W, it'll be sufficient for market condition. I won't add a percentage of risk. But if I do have fractals on those two W's, and the lows on those fractals are at different levels, so I'm describing different support levels on the W, then I will add a percentage of risk to my trade. Okay. Um, all right. So that's fractals. Okay. We got a couple examples in here um, of fractals in play, right? Um, This one's on Bitcoin, right? And this illustrates your kind of the point where it fires and where you put your risk to, right? So in this bullish fractal, the point where it fires is when price moves above this third candle's close. Um, well, I would say range, really, the high of the third candle. You have to risk to the low of the middle candle, right? And then of course we do our take profit targeting typically based on other Fibonacci retracement, something like that. But at a minimum, you want to do at least 2-to-1 risk to reward, right? Conversely, in a bearish fractal, right? And note that this is a bearish fractal, even though we have, like, if you looked at the closes, you wouldn't see this fractal if you just look at clotheslines. But when you look at candlesticks, that's where we actually see the fractal. So this is a candlestick specific thing. It doesn't work with line charts. Okay. Um, so this 3-bar fractal fires when we go below the third bar. You have to risk to the high of the middle bar, the middle candle. Um, and then, as I said before, typically we're going to look at our price structure. Sorry, I'm zooming a little crazy. We're going to look at our price structure to define our risk, and then we're going to look at our retracements to tell us where our likely target is. Okay. Out in the world, some schools of thought say you need 5 bars to confirm a fractal, so a break of the 5th bar. So that's middle candle, and then 2 successively lower or 2 successively higher, uh, well, lower highs or higher lows, right? Uh, you can look at those in here. Uh, at TRI, because we are looking at this market structure only in combination with these other indicators, we're totally fine with a 3-bar fractal. But um, but some schools of thought are going to want to look for 5-bar fractals. Okay. So if you use Joshua's script, you can do either. Joshua, can you, if you haven't already, can you share that script in chat, please? Um, all right. Where are we? Here we go. So that's fractals. All right. Um, Now let's move on to our next thing. Thank you, Joshua. I appreciate it. And Kevin, thanks for jumping in uh, on answering the question that was in there. There was a question in chat here about um, whether a bullish fractal was building on the daily chart on a particular thing, the ZRX USD. Um, and Kevin explained that it's not, because we see today's low lower than yesterday's. So, all right. Um, Engulfing patterns. All right. So an engulfing pattern is where we go from a small candlestick to a large candlestick. Um, Specifically, we want to see the body of the engulfing candlestick, so the box encompassing the entirety of the candlestick that's being engulfed. Okay, so on this one. We want to see the open outside of the previous range. So every candlestick is a range. Okay, when I say the full range of a candlestick, I mean from the high to the low, from the wick all the way down to the tail. Okay. Um, for an engulfing candlestick, we need to see it open outside of the range of the previous candlestick and close outside of the range of the previous candlestick. All right. So, let me turn my sound off here. For a bullish uh, engulfing pattern, we need to see a green candle engulfing a previous red candle. For a bearish engulfing pattern, we need to see a red candlestick engulf a previous green candle range. Okay. Let's look at entries too. Okay. And so, if we are looking at this market structure to define our risk, in order for this to fire, we need to see um, price move beyond this engulfing candlestick range, so above the high of the range, and we have to risk to the low of the range. Okay, that gives us our risk level. As usual, I don't chase, so I wouldn't like set an order to fire like one tick above this. You could. That's not how I do it. I'm a cheap ass, right? When I see a candle confirm a pattern, even with engulfing candlesticks, I put my bid at the candle body open of the previous of the candle that confirmed it. Okay, um, that means I don't get filled on a lot of engulfing candlesticks, and that's fine. When I do get filled, it's usually very my risk to reward is very good, right? Um, and let's have a brief discussion too about entry points. So when we look at candlestick patterns, okay, if we are looking here, let me just move this over. If we are looking at a uh, candlestick pattern reversal, so we're looking at a engulfing bar or a fractal, we really only have one level of support or resistance. Okay, so let me put it here. If we were to enter off of this fractal, right, we really only have this level because we have this 3-bar fractal, right? We have this level supporting our trade. Um, you could, I suppose, say that this candle, the low of this candle also supports it, but not really, right? It's this level that's going to support it. Means we have a cluster of orders that pushed price up here. We have a cluster of orders that pushed price up here, and those basically protect our trade. We're going long, right? Conversely, if we're going bearishly, we went off like this fractal. We have this level here, um, and that's pretty much it, right? Um, I don't feel like we have enough support from like a straight down movement, which we'll often see, or a straight up movement, which we'll often see. Now compare that with an M or W. If we're getting in off of, let me draw this W here so you see what I'm talking about. We're getting in off of this W, same level. High is 1364, high is 1384. Okay, so here, here, here. I gotta move this out of the way so you can see it. Okay. This isn't the best W in the world, but what this W does provide for us is distinctly different levels for the lows that we fought against, right? The reason I went to this one is just because this one we have a higher high on here, and I kind of want to see the middle high be the highest in between our two. Um, but both of these levels have an accumulation of orders because we had a pivot there that provide us support. I prefer having multiple levels of support or resistance for my trade. Okay, so uh, I will enter off of like an inside bar, outside bar, or a fractal. Most often in a scenario like a bot where I already have 3 lows or 3 highs supporting my trade. Um, but uh, I won't add any risk for fractal entry or a engulfing bar entry, but I will if it's a W and the W has um, fractals as its lows, or an M where fractals are the highs. Okay, so I feel more confident about having multiple levels of support or resistance for my trade. Okay. Taylor asks, what does fire on the third candle mean? Um, and Kevin says it means that fractal has confirmed. Yeah. So terminology that I'll use when a setup or a pattern um, becomes active. Okay, I'll say that it uh, the bot became live. Okay, but when I say it fired, that means I have all the confirmation I need to get in on that pattern or trade. Okay. And I'm not sure what you're asking here, Taylor, on the pivot. When I'm talking about pivots, I'm talking about where price has pivoted, right? Pivoted down, pivoted up. Um, Pivots is mostly a reference we use when we're talking about fractal or about Fibonacci's, right? Because like if we were to use these pivots as our range for our Fibonacci retracements, that's where we could look at this and see, okay, well, where's our reload zone going to be, right? We can look down here and we can see, okay, we can go from fractal to fractal to give us an idea of our range there. So we change that over to bullish, right? This is a good way that we have of kind of defining our ranges. Pivots really occur at fractals almost always. So where's my? It's weird. There it is. Okay. So hopefully that helps a little bit. All right. So engulfing pattern, where we had a candle, then we have a larger candle whose body encompasses the entire previous range of the previous candle, the entire range of the previous candle. Okay. Then we have inside bar reversals, and that's where we had a candle that was relatively large, and then we have a new candlestick um, that, and here's where we get into harami versus like bull rami. Okay. So a harami has its entire range within the previous candle body. Um, so uh, it's like the opposite of a outside bar. We also will trade something we call a bull rami or bear rami, um, and that is where the body is within here, but you might have the um, tail extending out for a bullish, right? Or you might have the head extending out a little bit for a bearish. Okay, that's a bull rami or a bear rami. That's not what we're seeing here. What we're seeing here are proper haramis, right? Where they're encompassed. This one might actually be a bear rami. It looks like this is a little bit lower than the candle body. But that's what we're looking at there. Now, color does matter when it comes to haramis, right? We want a red and then a green within, or a green and then a red within, um, because we want to see the prices reversing direction. So it does matter there. It does not matter with hammers or shooting stars. Um, all right. All right. So that's pretty much it, right? So we have inside bar reversals, outside bar reversals. So inside's where it's a smaller candle to the right, outside's where it's a larger candle to the right. Inside and outside candle bar reversals. We have railroad tracks where they're coming to the same level, and we're seeing a reversal there, or reversal there, right? We have fractals, which are 3-bar patterns, where we have a peak or a low of a candle, and the candle on either side of it. If it's a high, the candle on either side is going to be lower than that, where they where their highs are lower than the middle high. Um, and for a bullish fractal, you have a low, and then the low of the candle to the left and to the right is higher than the low in the middle. Okay. Um, that is pretty much it. Now the key part is these are our market structure components. So by themselves, they're not enough to justify a trade, right? But we use that for our market structure component. Okay, pretty straightforward stuff, I think. Excuse me. Let's do the quiz, and then we'll get into the Q&A sheet. Quiz. All right. So, um, approximately how old is Japanese candlestick price analysis? It's about 250 to 500 years old. Um, we don't have a really precise time frame because it's one of the things that developed concurrently from a lot of different people. We can't trace back the specific origin of it. But we know somewhere between 250 and 500 years ago it started showing up on the scene. All right, Japanese candlesticks were first used to plot and project the price of which commodity? And that's rice. Should a candlestick pattern on its own be enough to justify taking a trade? No, not on its own. It is our market structure component, right? When considering a trade, under what category does candlestick pattern fall? Um, that is a trade structure tool. Okay. Oh, I gotta move this over. Sorry, guys. I'm trying to keep my personal stuff out of your way here. Okay. I don't need synergy up either. Okay, there we go. And what are the 3 distinct candle patterns taught in the course? Again, there are many, many more candle patterns than this. This is just what we had to narrow it down to. What are the ones that we use most frequently? So what we teach is fractals, right? Inside reversals and outside reversals. Okay. What is the name of a single bullish candle called? A single bullish candle is a hammer, right? And that's where you have the long range, and then you have the small candle body at the top. And then a bullish fractal fires on the break of the 3rd bar's high, right? So just picture this. If we're looking at a bullish fractal, right? We are looking at a low, a lower low, and a higher low, and a break of this 3rd candle's high is is when that gets confirmed. Okay. And then a bearish harami signal fires on so this is the harami is often referred to as the mother and child, right? Um, so the child is entirely contained within the mother's belly, her body. Okay. And so a bearish harami signal fires on the break of the baby's low. Okay. So we have a large candle, and then we have a smaller candle whose entire range is encompassed within the body of this first candle. That's the baby. And for a bearish candle, this is green, and this one is red. I hope this is looking left to right to you guys. I'm not sure if it is. And then the break of that smaller candle's low is the bearish signal. Okay. A single candle with a small body and roughly equal-sized wick and tail is called a doji. And which of the following is not an indicator of price structure? So M's or W's, heads and shoulders, absolutely. Candlestick patterns are price structure. RSI divergence is not. That is momentum. All right, and then the area between the open and the close of a candlestick is called the body. Okay. And true or false? Essentially, a candlestick is a range. That is true. Right? If you take a candlestick, say a daily, and you look on the 30-minute, you're going to see that daily describes a whole range of action. Okay? And then what does a doji candle represent in terms of sentiment in the marketplace? The doji represents indecision in the marketplace. Okay? Doesn't necessarily mean it's going to be a reversal, um, but it does mean we are seeing indecision in the marketplace. And then in order for a hammer candlestick to be considered bullish, it must finish green in color, true or false. That is false. It does not matter the color of the candle when it comes to hammers or shooting stars or dojis. What matters is the pattern that the candle forms. And then what is the name of a single bearish candlestick? A single bearish candlestick is a shooting star. Okay. And then following a shooting star candle, the sell signal, the short, fires on the next candle at what point? This is a shooting star candle. So it's going to be a break of the shooting star tail low with the stop above the shooting star wick high. And then what is the most powerful two bar market reversal pattern? We call that the railroad tracks. And then using a candlestick math, what single bar pattern does a bullish railroad tracks pattern produce? We're talking about where um, on the first candle, price started high, and on the second candle, it finished high. So we'd be talking about a hammer. Okay. Candlestick math is another tool to help you interpret what price is showing you, but it's not a reason to take a trade. That's true. Um, if you were to move to a higher time frame, so candlestick math is basically moving to a higher time frame, right? If you were to move to a higher time frame to see what single candlestick pattern the hammer produced and you wanted to trade off of that, you would then need to make sure you still had your location reason and that you still have your momentum reasons on that higher time frame, and you'd be trading off of that higher time frame candlestick pattern. Okay? But we don't want to make the mistake of using candlestick math to interpret it and then looking for our momentum on a lower time frame. That is not good. You want your market structure and your momentum reasons to be on the same time frame. Okay. The maple leaf and the Canadian flag is an example of what fractal pattern? Right? It's an example of a head and shoulders. Okay. And then based on TRI's example, how many candlestick bars are required to confirm a fractal pattern? 3. Okay. And then please select an example of a fractal. Well, a head and shoulders for sure, maple leaf, an empire, and a diamond pattern. These are all fractal patterns. And then the Harami is considered an outside candlestick pattern reversal, true or false? That is false. That is an inside bar reversal, not an outside bar reversal. And then an engulfing outside bullish pattern reversal requires what? The market has to open outside the previous session low and close outside the previous session high. Right? The body needs to encompass the entirety of the range of the previous candle. And then weekly and monthly engulfing patterns are very rare and therefore not significant technical events. They are very rare. I'll show you an example of that right after this. But that means they are significant technical events. So we're going to say false here. And then who will jump out of the closet and chop your head off if you incorrectly call a bull rami, a bear rami, a harami? I think we have it set so that if you put Grim, Mr. Beamish, or Samurai, it's going to be true, but we're going to say Samurai. I don't know what Crypto Ninja Turtle. So that's the quiz. All right. Uh, let's get into the uh, Q&A sheet. So the first question, please elaborate on the Williams fractal in TradingView. Uh, what do they point out and how are they calculated? So I think we've answered this question just in going through this. Um, I'm not sure exactly what you're asking here. Uh, Williams fractals are based on um, the highs or the lows of three concurrent candles. The middle high for a bearish fractal, the middle high has to be the highest of the three, with the left and right highs being lower than it. For a bullish fractal, the low of the middle candle needs to be the lowest, with the left and the right being higher than the middle. Um, all right. All right. Fractal patterns only considered head and shoulders. You don't have a fractal for another pattern that appears as a regular basis in the marketplace. Uh, so no, I mean the fractal is a very particular pattern. It in itself, it is a head and shoulders on a lower time frame. That's just what it is. Um, but what we're really concerned about is the fractals themselves. Like that's what we look for. Okay. Uh, and then crypto is a 24/7 market, so engulfing bars can't appear in that market. I'm not sure where you get that idea. Let me say in here. What do you mean? An engulfing candlestick is a candle in which its body, it is an engulfing pattern, okay? But it's where its body encompasses the entire previous candle's action. That's an engulfing candlestick, and we see that all the time in the crypto market, okay? 24/7 nature of the market doesn't impact that at all. So I can show you here. BTC, USD, whatever, doesn't matter what. All right, I even have a um, script that will identify this for us. Okay, so this is daily. So let's get rid of the noise here. So I have an engulfing uh, uh, detector. Basically, it's going to color the engulfing bars, so you can find one. Wow, I haven't engulfing in a while for on the daily, have we? That's weird. There we go. So here we have a bearish engulfing candle. Okay. If we go to a shorter time frame, we can see it even more frequently, right? So let's come back to our and here auto. Let's go to 15 minute. Okay. Oh, yeah. Yeah, engulfing right there. Engulfing there. Uh, engulfing there. Engulfing there. So it absolutely occurs all the time. Okay. Um, I'm not sure where you get the idea that it wouldn't occur because it's a 24/7 market. Treasure says, I think they're asking because it's weird there's a lag between the close of one candle and the open of the other when the market never stops. Oh, well, we see this during a regular session. Like these engulfing bars don't occur between sessions, right? Between like the close of one market and the close of a market and the open of the that market. That's not when we see that most of the time. We see it just during the regular course of things, right? Um, because again, we're getting fills all over the place. So they're very often we'll see. It's like that's like saying you don't see gaps uh, in BTC. We see gaps. Yeah. Oh, Taylor, I created that. I'll share it with you guys. I think I got it on my paste bin. Mm, yeah, I'll share it with you. I also have a key reversal script. I'll share both of those with you guys. Really? How did I sign in here? Let's guess. I think I signed in with my. Or not. Okay, let's go back. Back. Dang it. Sorry, guys. Sometimes I just don't remember where I signed up. Sign in. How about Facebook? That would be weird, but come on. Sign in with Facebook, maybe? Oh, I guess I did it on Facebook. Weird. Okay. Um, all right, let's look for my engulfing. Grim engulfing. Here's my engulfing script. And come back here. Grim key reversal. Here's my key reversal script. And you can add those if you come into your trading view and you come down to the Pine editor, copy that script. So when you come into like here, you want to go to the raw paste data, right? You can do Control A, or for Macs, do Splat A to select all. It'll be Control A if you're in Linux, and then just copy that. And then in here, you're going to highlight everything here and just cut paste right on over the top of it. Okay. And save that. Give it your name. You can add it to the chart, right? And it'll show up there. Okay. All right. Okay. No problem. Always happy to share. I'll share a few more things here in just a minute. I'm gonna show you guys my one of the scanners that I use. Looks for engulfing patterns in the TradingView platform, and I'll share that script as well. Or sorry, it looks for key reversals. Okay. Bearish engulfing patterns, bearish engulfing bars, is a green candlestick followed by a red candlestick covering the whole body. So there were some things that were a little incorrect in here because we're not covering the body. An engulfing candle needs to encompass the entire range, the body plus wicks plus tails, of the previous candle. And a key reversal encompasses the entire range of the last two preceding candles. It's also important to note that a key reversal can be bullish or bearish. You only have a bullish example here, I think. But it can go either direction. All right, and whenever you see a Williams fractal, does it mean there's an actual head and shoulders pattern on the lower time? Well, I've seen a lot of indicator. The key part is that the head and shoulders pattern is on a lower time frame. For example, if you're seeing a fractal on a daily chart, the head and shoulders pattern will be observed on the 1 hour or maybe 4 hour time frame. So let's do an example here. So you're engulfing. Let's put the fractal back on. Let's look at a daily. Okay. Let me highlight the fractal. Okay. So, rectangle. I'm going to show a 3-bar fractal. Okay. So we have it highlighted here. This is on the 17th. Let's look on a 30-minute chart. Okay, I'm going to move back here to the 17th. It's going to take a minute. 27. Oh, man. Of course, I had to pick one way in the back. Still, this is, wait, this is the 9th. Oh, I'm beyond it. Hold on. Going the wrong way. There we go. You can do it. Where's the 17th? 30th? 29th? Is that not showing? Hold on, let me make sure this is showing on a. Where's my pattern? Where is. Oh, there it is. Okay. Visibility. Yeah, that's showing all the time frames. Maybe I just didn't make enough of a standout here. So at 12,500, 30-minute. 26th. Sorry, guys. 21st. 15th. Should be right in here. 18th. 15th. That's weird. It's not showing us that drawing, is it? Well, that's a little frustrating to try to show you this. All right, come here. Let's pick a newer one. Okay, let's grab this guy here. So what are we looking at? We're looking at the 23rd, 24th, and 25th. Maybe I need to do it on hourly. Maybe that's my problem. 23rd, 24th, and 25th. 20. Third, 24th, and 25th. All right. So what we're showing here, head and shoulders. 23rd. Okay. Is that right? God, it's hard to see sometimes, isn't it? There we go. 23rd. 24th. And 25th. I think this is going to be what we see here. Let's go to higher and see if it shows us there. Oh, I went too far, but okay, so I need to be down here. Sorry, guys. Yeah, it's a little bit of a pain. Let me do it this way. So, let's look here. Let's do a 4-hour. There we go. That's a bad example. God, it's really being a pain. Can I show you the risk reward? Oh, there's a lot of stuff going on. Hang on. Let me make sure I'm keeping up on chat. This one's kind of stuck with a particular layout, right? Especially when you're free version of TV. You need a few indicator panels, and so many indicators can be used. So yeah, you're gonna have to look manually with the free version. because you're only going to be able to have, I think, 3 indicators in total on your chart. But as far as like the custom indicators for fractals and stuff like that, that's going to be a little difficult. Um, let's go here. Head and shoulders. Trying to find you a good one, guys, too. I don't do a lot of head and shoulders by themselves. Most of what I'm looking at is fractals. So let me show you in terms of fractals here really quick. Okay. So if we are looking at a fractal entry, right, what we're saying here is that the distance, when we're looking at the long pattern tool, we'll look here. So this is this fractal here. We have this big stonking long one, right? Long low, then we have the low here, the higher low, and the lower low here again. What we're looking for is the neckline's going to be all wonky on this, on the head and shoulders, but nonetheless, what we're looking at here is something like this, right? Now, a 200% extension off of here, down here, is a 1-to-1 risk reward. That's why we don't chase, especially heads and shoulders, right? But what we're going to be looking for, so that's kind of why we did that with the long short tool, right? What we're looking for is, this is our market structure entry, right? So when we are looking at a setup, we're going to look at our location, so we're going to want to be in a reload zone. Then we're going to look for, or if we're doing a bot, we're going to need to be in a bot range. Then we look for momentum indicators, and that setup's going to tell us where we put our take profit at. So in our 3-step setup, we're in a reload zone. We take profits at the 50% mark of the downwards move, the latest downwards move. Let me show this on the screen, in fact. Hang on. So let's look here really quick. I'm going to get rid of these fractals because they mess with me a little bit. Is this a reload zone? It's probably a bad example. This one's not too bad. Okay. All right. So this is bullish. All right. So this reload zone here, right? This is a previous bullish move. So we draw our reload zones in here. RLZ bull. Okay. Then we look for a setup in here. Now let's say we've got our momentum reason here. So in this case, we only have RSI we're working with. We're going to learn these others in the future, but we have a W that confirms in here. I don't know if we could say, well, yes, we could. It's divergent because we go from the low of that, this guy here, right? We have higher lows here. And at the same spot, we have lower lows here. Okay. Is that there? Yeah, that's the right candle. So we have divergence. We're just below a reload zone, which is fine, right? Now, where are we going to place our take profits in this theoretical trade, right? We're going to go to our low from the high here. So this was the move down, right? We make this colored appropriately. And what we look for is the 50% level as our target level, right? So we put a horizontal ray here at our 50%, okay? So that's going to be our target. Now, when we come in here, let's put fractals back on now that we've done that. Okay. So we've got our divergence, we've got our location, we have our divergence. Now we're looking for a pattern to get us in on the trade, right? Now this divergence doesn't confirm until this candle here, because we need that W in the market structure for confirmation of divergence, right? So that's on this one here. We're going to look for an entry signal after that. Now probably we'll end up getting this W here. Okay. So do you see how where's my polyline tool? Oh, that's up here. Can you see how we got this W started here, here, and on this close above the middle here, this was the confirmation of that W, okay? It's a W I really like because we've got a fractal at the two lows of the W. So location was good. That would add a percentage of risk. This divergence was good. We'll learn over the next few weeks that the way I do my momentum for adding a percentage of risk is I use RSI, MACD, something we're going to learn called OBV, and something we're going to learn called Willy. And if I need at least two of those to be true for me to enter the trade, if three or more are true, then I'll add a percentage of risk. Let's assume it's just RSI, so I don't add a percentage of risk for that. And then we get to the market structure, and I'm looking at this, and I'm going to enter on this W, and that's going to let me add another percent. So this will be a 2% sized trade. Okay. Now I need to look and see, do I have enough? Is my risk to reward good? Now where I would put my bid, and incidentally I never would have gotten filled on this particular trade, is at the candle body open of the candle that confirmed the W. Okay. I risk to new lows, and would take profits at this 50% level. Okay. Now this particular trade, like I said, I wouldn't have gotten filled where I like to go because I want to get filled down here because I'm a cheap ass. But a person could look at any break above this level, right? In which case they would have gotten filled on the next candle, and they'd have to risk down to this low, and they would have gotten paid right here. Okay, but do you see what I'm saying? Like we do our targeting based off of this thing here, and then we do our risk based off of whatever the market structure we enter is. Beyond asks, are you taking the candle body close or its high as the entry level for the fractal entry? Well, it depends. We see confirmation of the fractal. So let me get rid of all this stuff. We see confirmation of the fractal. So like in the case of this fractal, the confirmation is any move on a subsequent candle above the high of this third candle. The high, not the candle body close. Okay, so any move above that level is what fires for this fractal. Okay. Now, where do I put my bids? Again, where I like to put my bid, where I like to get in on the trade is if we have a fractal, right? I wait for price to move above that point, and then I put a bid in at the candle body open of the candle that confirmed the session, right? So which really wouldn't be there, it would be this candle, right? Because the confirmation comes when we have a move above that fractal level. So this is the candle that confirms this fractal because we moved beyond that. Maybe it's this one. It's this one. Okay. This candle is the one where we saw price move beyond there. I really want to see a close above it though. So I would have probably gone off of this larger candle. Then I put the bid in here at the candle body open of that candle. And we probably would have gotten filled here. Now I say probably because it's not until this candle closes that I have the close above this level. Um, so I have to, after it closes is when I can put my bid in. And if price just shot down to here first and then moved away, then I might not have had enough time to get my bid in. But probably it opened here and messed around up a little bit, dropped back down, and then moved up. So I probably would have gotten my fill on this one. Okay. Does that make sense? I know that's a lot of information for you guys. I'm trying to give you good information, but I could be overloading you because this is kind of old hat for me. So, beyond, did that answer your question? It's the candle body high that needs to be broken to confirm, not the candle, sorry, the candle high, not the candle body high that needs to be broken. Okay, cool. Like I said, I'm throwing a lot out there, so don't feel free to tell me, hey man, it's too much. Give me some more detail, or give me less detail. Um, okay. I got all into all that because I was answering this thing. Oh, and I was never able to really draw. It's kind of a pain in the butt to draw, apparently, because my drawings are not persisting between time frames, and that's making it very difficult for me to show you the more details. Excellent, JDC. It's making it difficult for me to show you the heads and shoulders patterns. But can you understand how we got that? So a head and shoulders pattern is where we've like an inverted head and shoulders. Okay, we've prices come down to a certain level, come up, come down lower, come back up and retested that same level, come down lower, and then broken through. Okay, so you can understand why this is a head and shoulders. I hope. Okay. Um, but the key part when we're looking on the higher time frame, because again, we don't want to confuse our time frames, and I'll talk about this in a minute because we have a question about this. You want your market structure and your momentum reasons to be on the same time frame. Your location is independent; it can be on a larger time frame, but you want your head and shoulders, in this case, the pattern. If you're going to trade on the head and shoulders, you want that head and shoulders to be on the same time frame as your momentum. If you're using a fractal, you want your fractal to be on the same time frame as your momentum reasons. Okay. Okay. Uh, can we? Oh, this is the question where I'm going to answer that. Can we hunt for fractals or engulfing bar and Harami patterns on the 4-hour, and can we take a trade entry based on these patterns, or do these patterns only work best on higher time frames? So these patterns, like all the technical analysis that I teach in this course, they're all time frame agnostic, meaning they can be used on short or high time frame charts. I use these patterns on 1 minute charts. I use these patterns on 1 month charts, and everything in between. Okay. However, this is important. We always, always, always need at least 3 reasons for a trade. Okay. We're not going to be looking at these engulfing bars or key reversals and trading just on that. We need to be in a good location. So either a bot retracement zone or an RLZ. Okay. Then we need momentum reasons. We need to see divergence if we're doing a 3-step setup. We need to see convergent structure if we're doing a bot. So if we're doing a bot, we're going to look for a W that corresponds with our 3 higher lows, right? Convergent. If we are looking at a 3-step setup, we need divergence. We need to see lower lows and higher lows in that reload zone. Okay. And then we look for market structure. At that point, and only at that point, do we then look for M's and W's, triangles, heads and shoulders, inverted heads and shoulders, inside bars, outside bars, railroad tracks, the whole gamut, right? Um, we're just giving you a bunch of market structure tools. And I just refer to market structure. Market structure can be any of those tools, right? But I give more weight to
M's and W's and triangles because they have multiple lows or multiple highs that defend or support my trade than I do to single point reversals, right? Like an inside bar is a single point reversal. It reversed, but we only have one real low that we're dealing with there. Okay, so all right. On the US dollar index chart example in the end of the video, we first look at the bearish market state. Yep. Second for volume and momentum. Yep. And then third for market structure. And only after spotting that bullish Rami, we can draw the fib retracements in order to find our LZ. No, that's not really the order that I'd go in. So I look for the bearish market. I would look for the bearish market state. Then I would draw my retracements. Okay. Draw my fibs. Because the first thing I want to identify is that we're in a good location. I want to identify that we either have had a pullback into the bearish or into the bot reload zones, or we've pulled back into the RLZ. Then I look at momentum, and then I look for reversal patterns, either candlesticks or market transition patterns. Okay, so that's my order of operations: location, then momentum, then market structure. Okay, and I think we're gonna have time. It's only 9:30. We should have time. I'll show you kind of an example of how what I do on Sundays, like how I go through my trading, and the scanners that I use and that kind of stuff. All right. On the S&P 500 weekly chart in the video, Brian points out a bearish engulfing pattern followed by a fractal. It looks to me like an inverted empire, which would indicate bull, not bear. Is it correct to say that because engulfing bars are much more rare than fractals, they are a stronger signal, and we should consider them over contradicting following fractals? Um, well, here's how I do it. Um, because of my order of operations, okay, I first have looked at trend, so I know what direction the market's headed, and I don't want to trade against the trend. I want to go with the trend. So I've identified the trend. I know which direction the market's headed. I know where my retracement levels are, so I know whether I'm doing a continuation trade because it's in the bot range, or I know that I'm looking for a reversal trade because it's up in the RLZ at that point. So I know which direction I'm looking for a trade in, okay? And then I'm going to look for structure that supports that direction of trade, okay? Um, I don't do it like I don't know what direction it is, so I'm looking at market structure to tell me what direction it is. That's not really how I do it, okay? So it's not a matter of like, well, we've got a signal in one direction, but a signal in the other, and which one's stronger. I think that's a mistake to get into that. This is stronger than that sort of debate. I think it's much better to look at where are you at, like in terms of retracement level, to determine what direction are we headed. Are we in an area for a reversal? So are we thinking reversal? Do we have divergence? Right? What direction is our what direction are our momentum indicators telling us we need to go? And then I look for structure that supports that direction to frame my trade. All right. How do you find stocks you want to trade? I'll go over that in just a minute. So the short answer is, yeah, I use the screeners that we've taught in the class. I use the screeners on FinViz. I also look at, I have a couple of technical screeners that I use in TD Ameritrade. I also keep an eye on what's going on in chat. What is Brian talking about in the daily brief? So like when I'm watching the daily brief, it's an active thing. So I watch the daily brief and I'm taking notes. And one of the things I'm noting is what are the assets that he's mentioning, right? And maybe it's too late to get into a trade on them, but oftentimes when it's too late for a reversal, I can still get in on like a bot trade on that um, asset. And so I'll keep a list of those, right? I have some other sources where, and this is how I use, incidentally, things like email lists and um, maybe somebody has like a Discord talk that they give, or something they do on YouTube. Those resources where they're giving you tips on stocks and things like that. What I'll do is I take just the list of names, right, and I do my own analysis on it. And that's the only way that it really has value to me. If one of these analysts that I'm listening to gives me their analysis, that's great, and I will first do my analysis, and then I will take their analysis into account and say, okay, does that match up with what I'm seeing here? Do I see that on my own? And that's how I make use of those kind of services, right? Um, so I use all of those throughout the week. I just literally I will just I have like an Evernote set up, right? And if I see an article or something like that, I'll send it over to my Evernote, or I'll like record it on my phone, and then at the end of each day, I go through my notes that I've taken on my phone and I add those to wherever they need to be added, right? And so I kind of have a running list of these are assets that I'm interested in. And then on Sundays, I also do my scan through FinViz, and I'm looking at WDB, I'm looking at GARP, and I'm looking at CanSlim, and uh, I go through those and I look for um, them to be in a good location. I look for a potential momentum indication, right? And then I look through these technical scanners in my TD Ameritrade, and the technical scanners will sometimes pop things out that didn't show up otherwise. Now, if it pops up on a technical scanner, I then need to go back and do fundamental analysis and make sure that it corresponds with that, because sometimes I'll get technical signals. Well, very often I'll get technical signals on assets that I don't really want to be in long term. So that will guide the duration of my trade. If I get a good signal on the 4 hour, I'm not maybe as concerned about the long-term fundamental indicators of the asset. But if I get a trading signal on a daily, I certainly am, right? Um, so, like I said, I'll walk through some of this process so you'll see. Um, Thoughts on this trade. Uh, well, I don't love where you've drawn the fibs from. It's a daily, right? I guess it's okay. Like this, well, no, it's not too bad. I'm looking at this overall structure. Okay, so we're just looking at, okay, we came up here, bounced down here. It's not terrible, but here's the problem. I don't like their targeting. Okay, and here's the real problem. Let me pull this up. This is Holly, HOLI on the daily. Okay, so here's my problem with this overall thing. Okay, I really need to be aware of this larger move here. I'm going to draw the bearish ones first and the bullish ones just because I'm lazy. Okay. Here's this move down to here. And then let's do our bullish retracements. This up to here. Change this to bullish. And then this here. Okay. Here's my problem with the trade as you've described it. You're looking at this W, right? But what's our realistic target for the move? We need to look at the previous down move. That's this move here. To be generous, I mean, really, we might want to just go off of this one. When you look at the 50% level, the 50% level is right here, right? Do you see how, if that's our target, okay, let's come into here. Let me get rid of this bullish drawing here. If this is our target, right, which is a realistic target, and we're not entering until this W has confirmed, and we have to risk to a break of new lows on the W, can you see how upside down this trade is? Right, our reward is half what our risk is. That's the problem with that one, and that's the problem with these steep W's. Right, I want a nice wide bottom W that's not super steep, because that gives me a good short risk area, and my reward area could be quite high. You've got your reward area way the heck up here, and I don't think that's realistic. right? Yeah, it's a 2 to 1, but what's the likelihood of testing these highs? I don't think it's terribly great. So, so yeah, not a great fan of what we have drawn here. I think that reward area is way too high. JDC says, this is exactly the same strategy I'm gravitating to. I think he's talking about how I analyze what people have presented. Hear them out, try to anticipate the TA. I still freeze when the market's not clear enough. That's perfect. Maybe that's not a bad thing. It's not a bad thing at all. If we want the best possible scenarios, we want to feel confident in what we're doing. We want to do it consistently, and we need it to match our setups. So when I do the analysis, here's what my analysis looks like. Brian might post something, right? And this is my point. Like the analysis that we're getting and the tips we're getting might be really good. They might come, they're not necessarily like bogus, right? Brian, if he's recommending something, I'm I am have a high level of confidence that he's not pulling out his butt. He's doing an analysis and he has a reason for it because that's how he trades, right? But his analysis might not match up with my setups. He's going to be working off his own setups. So he might say, I've got a good trade coming in on this thing. And then I do the analysis and I go, okay, I'm working with these setups, these specific setups. And it just doesn't match up. There have been many times when he's posted something and I go, I don't really have a setup for that. And that's fine. There's nothing wrong with that. Okay. Somebody else might have a setup. Now, maybe they have a setup and you see this happening again and again where they have something and you don't have a setup for it. Ask them about it. Say, hey, what's your setup for this? What do you look for? And maybe they're willing to share it with you. And then you have something else you can add into your basket of things that you can trade, right? And test it. When you get that new setup, you have to paper trade it. You have to test it, make sure that you have confidence in it, make sure that it's winning at least 66% of the time. But if it is, roll that into your basket, roll that into your toolkit, man. Um, no, I think that's a great approach. If it doesn't match your setups, don't trade it. But by all means, listen to the world around you. If people are saying, hey, there's a good trade on this, do your analysis. Does it match any of your setups that are vetted? Cool. If it doesn't, I mean, paper trade it. If you need to see how it's going to behave, paper trade it. See what happens. There's nothing wrong with that. Sometimes that'll help you get it out of your system, right? Because it's easy to latch onto something when someone's like, "Oh, this is a good idea," and you're like, "Man, I really want to trade that, and that looks really interesting, but I don't have a setup for it. I'll paper trade it." And I go, "Okay, let's get it out of my system. I'm going to paper trade it. I'm going to see how that behaves." You know? Yeah, it's not a bad approach at all. Okay. Well, this is a long one. Let me know if my thinking about risk percentage is right. Okay. Let's say I have 10 grand to trade. Is that right? 10 grand. Okay. The commission to buy stock is $10 and $10 out, so 20 bucks. Uh, the least I've seen so far is $8 transaction for commission. Let's put $10 for example. Okay. Um, you can get cheaper than that, quite a bit, but it depends where you're at and what country you're in and your broker. But that's fine. Let's say 20 bucks in and out. Okay. I put a maximum of $500 in one trade, 5%. So the stock is $10. I can buy 50 of them for $510. If I sell them at $15, that's 50% rise, makes 230. Risk 115 on the downside if my SNL comes in at $8.10, so I'm risking about 1%, and my real risk is 1.15%. Which of these two risks do I use to calculate the amount to put in? Well, here's how I go about it. So when also the commission is eating a lot of the gain, but mostly because I have to put my stop loss at a price way higher. Is there a way to pay cheaper commission than that, or is that how it is? There are ways to pay cheaper commission. You need to scout around to different brokers and see what the commission rate is. Um, uh, one of the there are some free commission brokers out there. It depends again where you're trading from. I'm guessing because you're using commas instead of periods that you're probably in Europe. I don't know if Australia uses periods or commas for their um, place delimiter, but um, in Europe, I don't know if there's much in the way of free transaction brokers or not. Problem with a lot of those is they have pretty bad order management stuff. But even at like TD Ameritrade, on TD Ameritrade, I pay no commissions for my stock purchases or sells. I pay a commission for my options trades, and I pay a commission for my futures and forex trades. Um, but here's how I think about commission. Here's how I deal with it. Okay. What I want to know is how much money am I going to gain or lose on the trade per tick, per smallest possible move up. Okay. And when I look at my risk to reward, I determine my reward level based on the setup. Right. That's where I'm going to take my profits. And then I look at my uh, where I need to set my stop and where I'm going to enter at. Okay. Um, Typically speaking, because of my entry mechanic, because like when I see structure come in, I want to enter at the candle body open of the candle that confirmed the structure. That usually give me some pretty significant advantage on my risk to reward ratio. Um, if I'm most of my trading ends up being about a 3 to 1 or better. Um, so if doing like a 3 to 1, the commissions usually isn't a significant portion of that. I mean, it exists and it's there, but I need to make sure that I account for that. So when I'm looking at like how many ticks of profit, so like when you're looking, let me do it this way. If we're looking at the long tool, okay, let's say I'm risking down to here. Let's say I've got a 2 to 1. Again, in this particular trade, that's not realistic, but let's just, for the purpose of this little mini tutorial, let's say we're going to go 2 to 1. You'll notice there are a few different numbers here. The 3.4, this is the target, um, has to do with the number of units. The 340 is the number of ticks, right, between my entry point and my exit point. So if I know how much money each tick amounts for, so a tick in this case is 1 cent, right? We can see that because of how many zeros we have here. It's 1 cent, 1% of the overall thing. So that's a tick. So if I know how much money each of those ticks corresponds to, then I can look at this and say, okay, so 340 ticks up, I've got 170 ticks down. Okay. This is how much I stand to lose, and this is how much I stand to gain. Now I need to add into there or subtract from this my commissions, or add into this the cost of my commissions, right? Um, in my case, how much you're going to make per tick is going to vary on how much you buy, right? And so this math all comes together in here, and that's kind of how I look at it. Hang on, I think I've got a cheat sheet in here too. Oh, you know what? I think we have one on the site too. The Rational Investor, because I'm about 99% sure it's on my dashboard. Right? Um, position size. Oh no, this doesn't have that in there. All right, well, hold on. Position size. All right. Oh, this one doesn't have that in there either. I thought I had a version that I made that included the commissions in there. To be honest, most of the time I just do it in my head. I know what my commission cost is, and I go, okay, I stand to make this much money on here, or I stand to lose this much money, and I just in my head go, okay, um, I need to add, this is how much I stand to gain, here's how much I stand to lose. Okay. I think you're overthinking it, I guess is my long term. That's fine. This isn't mine. This is somebody else. Somebody created this and I took a copy of it. Hmm. Well, this doesn't really do what I want it to do. I guess the short version of this is um, most of my trades are about 3%. I'm not opposed to your way of calculating this, right? Saying that you need to have at least 2.62, that's fine, right? Just keep that in mind in your trades, right? You'll have plenty of opportunities to get 3 to 1, even 5 to 1 risk to reward um, using the setups that we're going to teach, using the 3-step setup, using the bot. I mean, the bot very often is more than 3 to 1 because I mean, if you think about it, on the bot we try to enter at 25%, right? So 25% is going to get you a 3 to 1 risk to reward, right? Because that's 25%, and there's 75% above it in gain. So getting above a 2.6 risk to reward rate isn't that hard as long as you're using the setups. Okay. I think if you're calculating this out, that's great. I suspect you may be overthinking it a bit, but that's fine. I mean, if it makes you comfortable to know, okay, if I do 2.62, then I know I've got um, an adequate risk to reward that accounts for my commissions. I think that's fine. Um, $20 in and out is, in my experience, pretty high. So, so TD Ameritrade before TD moved to commission-free trades for stock, uh, I started out with my commissions being $5 in, $5 out. After about a month of trading, I gave them a call. I just called the broker desk and I said, "Okay, can you guys do better?" And they gave me down. I think they put it at $1 in and out, $1 in, $1 out for my stock. So that was substantially better, right? So what I would suggest is um, talk to your broker. If you really like your broker and you like the order mechanics of your broker, um, I think you can accommodate a 2.62 risk to reward need without too much trouble. However, I do recommend call your broker, especially after a couple months of trading where you've got a significant amount of money on the exchange. Just give them a call and say, look, I've got 10 grand here. Um, I'd like to keep trading with you guys, but your costs are really high. Um, what can you do to help me out on the thing? And maybe they'll say, nothing, you're stuck. Or what I've seen much more likely, they're going to say, okay, well, here's what we can do for you. And they'll lower your commission rates. Okay. The commission rates are totally arbitrary. They're up to the exchange. That's how they're making their money, right? So, um, generally speaking, I think they would rather, sorry, I got to fix some of this. I think they would rather keep you as a customer and make a little less money than lose you as a customer and only keep customers that are making more. Generally speaking, I think that's uh, how they think about things. They're long-term greedy, not short-term greedy. Okay. Um, oh, good share. So Joshua just shared this position size calculator. I don't know if it takes into account. That's the one that we have on the website. I don't think it takes into account um, commissions, but yeah, there's a few different places. If I don't think it's going to help the person that posted this question because I don't think you're from the states. But if you're in the states, if you are a veteran or active duty first responder, that's military, police officer, firefighter, what have you, you can get a commission-free trading account at oh, where is that? That's commission free broker for veterans. Where was that? TradeStation. So TradeStation Salutes is what they have set up. So you can get commission free here, and TradeStation's got pretty good order management. Um, you can do conditional orders on there and that kind of thing. TD Ameritrade right now has commission free for stock purchases for everybody. It's not just me. Stock purchases and sales. That doesn't apply to options or forwards or I'm sorry, it doesn't apply to options or futures or forex, but it does apply to stock, which is good. Um, I would say hunt around a bit. I ask in the lounge. I'm sure we have other people from the whatever country you're from, um, and you can see what options that they have available. Like we have a number of traders in Europe. We've got a number of traders in Australia and Asia. Ask around and see what people are using. For me, when I'm deciding on a broker, my number one thing is order entry mechanics. Can I do a conditional order that where I can have both my stop and my take profit on the books working while I'm not watching the trade? Okay, that's the number one biggest thing. The second thing I look at is commissions. How much am I paying in commissions? Do I think that I'm going to have a tough time covering those commissions on my trades? My average trade size right now is like 2.9 something. It's almost 3. Um, and yeah, I don't think you're going to have a hard time meeting these rates, but obviously you want the lowest commission possible given that if you have good trade mechanics. Trade mechanics trumps everything. Okay. All right. If you take a look at this chart, I'm reading two very opposite signs happening all at the same time. Would you go for and why? M's and W's. Okay, so this has to do with what I talked about earlier. What we want to do is identify what direction are we looking to take a trade, okay, based on our location and based on our momentum indicators. Then we look for structure that to come in and give us confirmation correspondingly. In this case, this doesn't look to be an M or a W. This is a triangle, and we're looking for a breakout on that triangle. So it really depends on what my location is telling me and what my momentum is telling me. I can't seem to be able to load the volume profile on TradingView. So you have to have a, I think, premium account on TradingView in order to look at volume profile. It's not really important for you guys in level 1. We're going to learn volume profile until level 2. But I want to say here, let me load incognito and go to TradingView and see what the account levels are. There we go. Does it say in here? There we go. So you have to have at least a pro level account in order to get volume profile indicators. Okay. Okay. Is this the last question? Yeah. All right. So let me kind of walk you guys through my my like Sunday process a little bit. There's going to be more to this. I'll do this repeatedly. I'll do this a few different times during the course here as we learn more tools. So you're going to see more tools available there. Okay. But basically, after my session with you guys, what I'm going to do is I spend 4 or 5 hours working on trading for the week. I set up all my stuff for the week. Here's what I do. So I go to FinViz. Now, like I said, I've been keeping a list, as Brian's talked about in the daily brief, or there's a few other sources that I use where I look for interesting trades. And I just accumulate those into a list, right? But before I get there, I start with my screeners in trading or in FinViz. So I usually get WDB first. So I'll bring it up here, and then I will go to TA, and this gives me like a snapshot of like the market cap and stuff like that, but also a picture of the asset itself. Okay. And I'm looking for things that look interesting. Now, what I'm looking for with a WDB is going long. So what I want to find is assets that have been high but are now really low, right? Um, so like this isn't too bad, but I feel like the 50% of this down move is going to be like around here. I feel like we've already hit that, so then I got to look at the 50% of this move. Well, it kind of looks like we might have hit that there. Maybe I'll take a look at it. So I'll just go put it on a tab here. I don't know if you can see my tabs. I don't remember how I have that set up. Where you at? Can you see my tabs? Yeah, you can. No, no, you cannot. Hang on, I can make that better. I want. No, that's not what I'm looking for. How do I expand that? No. There we go. Just so you guys can see my tabs a little bit. Okay. Sorry for moving all around on the fly, but I figure that way you can see what I'm doing a little better. Okay. Okay, so you should be able to see I open that as a new tab here. And I just kind of come down. This is my process, right? That one's getting into an interesting area. I don't think we're going to have a setup yet, but it might be interesting to have that on my list. That's a little high. It's a little high. It's a little high. And I just go through here, right? This is literally what I'm doing. I'm just compiling up my list. Maybe. Okay. So I know that all of these met my WDB criteria. So now I'm looking just at technicals. Where we at? Oh, this looks kind of Citigroup, huh? Okay. That looks kind of interesting. And I'm just kind of eyeballing, like, are we down in this area of the chart, right? I don't like how gappy this one is, so I'm going to pass on that. I don't know how high we came off of for this one, so I'll take a look. Way too high, way too high, way too high. Ooh, that looks interesting. That both looks interesting in location, and that looks pretty W-y. Might have gone too far already, but we'll see. Right. So this is the kind of thing I'm doing. I'm just, ooh, that looks interesting. Right. So I'm just eyeballing that stuff. Okay. Now, ultimately, what I'll end up with, and I'm not going to go through the whole thing because I don't want to spend all the time on this, but what I'm going to end up with is I'm going to look at this, I'm going to look, and I'm going to see, do we have the VCIM criteria? So basically, for each of these things, I look through the screener, and then I look and see, do they have VCIM criteria? It's options for debt, that kind of stuff. I'm going to look at the news on each of these. This takes a while. Like I said, I'm spending 5 or 6 hours on this, right? So that's WDB. I'll also look at CanSlim stocks, right? Got a couple pages of CanSlim stocks. Kind of looking similarly. I'm looking for, like, this is a little bit interesting. No, nope, nope, nope. And it's in the good area, but it's not looking great. I don't think that's going to be something, but I'll put it on my list. We'll take a look. Archon, right? So that's it. I'm going to do that with each of my screeners, okay? And then I got GARP in here as well. And for all these are all bullish fundamentals, so I'm looking for bullish locations. Down low, I want to get them cheap, right? I want them while they're on sale, right? Okay, so that's the kind of thing I do. I'm not gonna, like I said, I'm not gonna go through the whole thing. Then I'll come in here. I'll look for the news for each of these things, right? That's why I use Finviz, because I can just look at the news aggregate here. Do I see anything that stands out? I'm going to look the last month or so, right? Um, that's going to help me wheedle out some other things, right? Um, then, as I'm doing that, what I can do is over here, I create a new list. I do this each week, right? And I don't remember what week of the month it is. Let me look really quick. I got my own tools for looking for stuff. So task calendar. All right. So this is week 45. So all right. Yep. So I go 45. Um, and I just call it screening. Save that. Right. And then I'm gonna just kind of add these through here. So I'm gonna go through these one by one, right? But once I've done that, if I've ruled stuff out, I've ruled stuff out. Otherwise, I'm just going to start adding stuff into here, right? So I just go AKO. All right. Oh, AKO dash B. AKO B. Is that right? Yeah. Okay. Come in here. Ugh, garbage. All right. Well, we're going to roll that one out. Archon. RCON. Not too bad. And I'm just adding these to my. You can just flag them in the case of your free accounts. If you can add them to your screener, great. You add to the screener by going over here and going and where's it at? Name of this? Ah, so that's Alt W. So, yeah, okay. So come through there. Okay, Archon, NCTY, NCTY, Alt W, CXDO, Alt, Alt W, FISI, Alt W. All right, I just go through each of these and I'm adding them onto here. Okay. So let's say I've done that with all these. That's my Finviz look. Now I'm going to go into TD Ameritrade, which I've got open here. Okay. So in here, I've got so in TD Ameritrade, you've got the scan utility. I've got a bunch of different scans that I've set up. You can set up like what stock price are you looking at? So this is volume. What volume am I looking at? What volume index I'm looking at, which is volume uh, related to its historical volume. Okay, and then I've got this custom indicator, and I'll share this. I think I've got that back on my paste bin. Where do I see my stuff? My paste bin. There we go. TDA. Oh, I guess I don't have it saved in here. Let me throw it in there really quick. So what this looks for, copy, is this is looking for key reversals. Okay. Add a paste. We're going to call this, where's the name thing? Grim TDA key reversal scan. Okay. This is not for trading view. Not for trading view, for think or swim scanner. Okay. And what this does is it looks through the world of stocks. In this case, it is just looking for all symbols, right? And it looks for stocks where we have key reversals. And this is looking on the daily, right? You can see there's only a handful of these. Let's look at the weekly. So I've got load scan query, personal. You can see I have a bunch of stuff I've created, but key reversal weekly. One stock, SFNC. Okay. Like I said, pretty rare. Now, in here, I can come over and go key reversal weekly and go to my charts in here. And I can just click on it and see what the chart looks like. But that's not my favorite way to do it. I prefer TradingView to do my analysis. So I'll just save these out. I can export them as a file, right? In this case, I have one thing, so I'm just going to look. SFNC weekly key reversal right there. So we have this bullish key reversal coming off the weekly here. I look and I go, okay, where are we at in location? Well, oops. Is that as low as it's been? Low up here to the high. So we're seeing a key reversal in a big old weekly reload zone, right? That part's kind of good, but that's a pretty long time frame, right? So that gives me location, but then I'll drill down into a lower time frame. I'll look at the daily. Well, do we have stuff setting up for the daily? Maybe, but it doesn't look great. This isn't really divergence here, right? This is making a great big old W, but so is price at the same time. So this looks like I might just be hunting this for a little bit. Now, on the daily, what I'm probably going to hunt is this 50% level. Like, are we going to put some price in down here? So when we get a weekly key reversal, I'm not looking at necessarily entering the week we have it, or even a couple weeks later, right? That just gives me an idea of, okay, we're probably flipping around. But on the daily, I don't really have a setup here on the daily. On the 4 hour, again, doesn't look great, right? It's a little high, right? If I were looking at the 4 hour, I do have a bullish reload zone here, but we're well above that now. You know, if I'd seen this earlier, maybe I could have done something with this here, but it doesn't look great yet, right? But that's how I identify these things. So I'm just basically adding a bunch of stuff to the list. This list might be 100 assets long by the time I'm done just accumulating those, and then I go through and look for location and a bunch of other stuff, right? In addition to the key reversal weekly, I'm going to look at my key reversal daily. Just the same script that I just gave you. You just set the daily on the scan, right? So under the scan, where it says weekly, we just change that to daily and then save it as the well, under the name that has the daily on it, right? So I got a bunch of these here. I think I already exported that and imported it um, as this key reversal daily, right? So then I can look at each of these um, and I look on the daily for this key reversal. There it is. Then because that's occurring on the daily, I need to look on the daily for where we at with um, location, right? This looks like it might be okay for a bot. That might be below 66%, but let's take a look and see. Bot range. Oh, too low for me. So some people are like Brian's a little more forgiving on if it's just a little bit below the 66%. That might be too deep for him, even though. But that is once it gets beyond 66% at all for me, even a tail, that's gone too far for me to do a bot on. Um, there's a few different setups I'll hunt in there for this, but that's the kind of thing we're looking at, right? Is where are we at in location? Like this, we had this bullish key reversal. There's no, I can't get in there. Like that's a terrible location for me to go long, right? Up against these highs. No, I just disregard it. So what I do is when I look through it and I'm like, nope, bad location, I just remove it. Okay. And I keep going through. And I'm like, okay, what about this? Well, we're looking for a bot. We're looking for something else. That's kind of interesting, isn't it? Look at that. There's our bot level. So in this case, we have this key reversal. If I can get 3 more higher highs, or sorry, higher lows. So I'll do the first low here. If I can get 3 more higher lows in here, I might pull the trigger on that, right? Depends on where they come in at and all of that jazz. But if I can get 3 higher lows before this 25% level, and if we have internal momentum that's giving me W's, then yeah, I'll pull the trigger on that and we'll see where it goes. But that's kind of how I do my hunting, right? So that one's still good. I'm going to keep that. This one, that's actually a pretty good location, right? You can come in here. If we look, and you'll become comfortable with it over time. I can just look at it and see that's probably a good location, right? Um, but don't expect to be able to just eyeball this right off the bat. You're going to need to draw your fibs and see where it's at first, right? And then I'll look here, probably off this second move to give me an idea of where my targeting would be. Okay, target something about here. I really need it to drop down, but if I got to fill down here, I wouldn't mind that at all, right? Um, Now, gap theory you're going to learn in level 2, but I don't think that I can get away with a 2-to-1 off of this if I do. We're going to see what this does. Like, we have this down candle here. If this comes down a bit more before it breaks up, because we haven't confirmed this key reversal, right? We haven't moved above this level. But if we can have it move down a bit and then give us like a long candle that confirms here, then maybe I can do a bid on the candle body open of that long candle, and then hopefully it comes down and fills that before it takes off. But that's the kind of thing I hunt for, right? So that's interesting. I'm interested in this. I need to do more analysis, but it's interesting. It stays on my list. This guy's not looking great for me right now, but let's see if maybe on a 4-hour. Yeah, we have a key reversal on both the 4-hour and the daily. That's kind of cool, right? You see this? So what I'd probably do for this is, because we're so high, and here's what my thinking is, okay? Because we're so high up, I'm not really interested in like getting in on a buy up here for the daily for this to push higher into new highs. I think that's probably not realistic. I don't know what these guys do exactly. Universal Display Corp. Let's take a look. And like I said, this is just since we got this out of a pure technical screener, we don't know what the fundamentals look like. UD no OLED OLED. Oh, so this is going to probably monitor manufacturers. Growth engines are roaring back to life. Motley Fool likes them yesterday. Zach's likes them yesterday. That's what makes me a little nervous. So we have this contrarian nature to us as traders. When I see Zach's and Motley Fool, when I see those analysts pimping it, I get a little nervous about where this is going, right? Because um, their job is really to sell stocks, and um, you know the big boys want to sell us stocks at these prices. I'm also aware of this gap here, and we're pretty over high. Yeah, it stinks, but I'm probably gonna have to pass on this one. I mean, the location's just not great, right? If we move up here, like this is a great spot for a short, right? Location wise, because we got to look at this like move, um, and because it's a great spot for a short, I can't really, in good conscience, look to the structures meaning anything. Because again, we got to go location, then momentum, and momentum's not looking great. Um, and then we do market structure. Yeah, man. My brother loves trying to follow along with these like Motley Fool and Zach's and like there are so many times we have a conversation where I'm like, dude, if they're screaming, we got to get out of there. Like that's no place to be buying. It's no place for dry land. Um, so that's kind of so this leaves my list. Now it's interesting to note. Um, I will be looking under my own template. Right now I'm under the TRI level 1 template. But if your drawings are saved in your template indefinitely, eventually you'll get a message and they'll be like, you need to clean up your old drawings. And you go through and you clear them out, right? Yeah. Yeah, Jerdog says all their picks are expensive anyway. I agree. Well, there's a reason they're expensive, right? They're in the job, their business as analysts is to sell stocks, right? And who do you think they work for? They don't work for the general public, right? They work for these big desks. And these big institutional investors buy when it's low and they sell when it's high. Well, they're part of how they sell is they go um, to these analysts and they say, oh, isn't this great? Look at this stock. Now, I don't think it's a wink, wink, nudge, nudge thing for the most part. I don't think it's quite that corrupt. I could be wrong. Brian might very well tell me, nope, no, it's totally that bad, and I would trust him on it. But it doesn't really matter. Like even if they're well intentioned, which I don't think they're necessarily well intentioned either. I think they're just like, look, this great stuff to sell. We got this big inventory of it. Um, the analyst job is to convince you that it's a good buy when it's way up high. So it is it is not uncommon at all, right? And this comes back to doing your own analysis. Now, does that mean they're not going to push things that are actually good buys? Of course they will. Of course they will. Um, I don't think it's all just conspiracy and these guys are all assholes and they're all trying to steal your money. I really don't. Now, maybe that's just my optimism and that I generally think people are trying to do their job. But it is important to understand that these analysts, their job is to sell you stocks. And so very often I kind of counter trend them. Yeah. And yeah, it depends on what your, as you say, Gerard, it depends on what your strategy is. If you're talking about long-term investing, these might be great buys. But their timing is always terrible. The timing is the timing is often terrible, right? So like OLED's off my list. I can't keep it on there because of the location, right? So So anyway, so that's basically my process that I go through on Sundays. I grab my list, my several different screeners off of FinViz. I grab my technical screeners off of Thinkorswim, right? On the site itself, we've got some really good screening utilities, um, which have been kind of in development, right, for a while. So it's really kind of a question of this will become my more regular um, spot where I grab stuff from for a couple of reasons. One of the things I really like about TRI screeners um, is my TD Ameritrade. I really like the screeners that I have on Thinkorswim, but they only apply to stocks, futures, and forex. There's no visibility into cryptocurrency, right? Whereas Sjord's working at, he's been pulling together the aggregation of cryptocurrencies and stocks and the whole gamut, right? Futures, forex. I think he has forex in here. But that's why this ultimately will probably become where I find most of my ideas. Now I'm going to find the ideas, like we got Davos in here, 13 EMA crosses, things like that. And then I'm going to, just like with anything else, I'm going to grab the stock listing. Is there an export feature on here? No, not necessarily, but it will dynamically open in TradingView, I believe. Oh no, that's cool. Oh, you guys are building your own thing. Cool. So keep an eye out on this, right? But what I'll do is I'll grab the list of stocks that pass the screeners here, these technical screeners, and I'll throw them into TradingView and I'll do analysis on them like all the rest, right? So that's what I do. I aggregate all that stuff into a big pile. That big pile is my list on TradingView, and so that list, like I said, I name it by week, and then I just so this will have 150 names in it, and I'll go through each of those and I whittle them down. What's ready for a trade? What trades have fired? Or if I have location and momentum and I'm just waiting for market structure, then it stays on my list, right? And then what I do during the week is I'll have my short list. Those are those guys, right? If it's fired and I've got an order to place, I'll place the order on Thinkorswim, right? Um, and um, and then of course I log all of that in my trading log, right? My trading log's a little different than what you guys have. It's a little more complicated. I'm not necessarily going to display that to you guys because mine's set up for options trading. Most of my trading in stocks is actually on options, so that's a little complex. But then I'll log all of that stuff in there, and I actually put them on. And you might want to do this too. I actually put the trades on my trading log sheet before the trade fires. So if I've got location, I've got momentum, and I'm hunting it, and so it's on this list, it goes on my trading view or my trading log. I just don't have a opened price on there or an opened date, and then I'm hunting that. And that gives me my short list, right? And then when I enter, I've got all the information already on there. I put my chart on there ahead of time, and then I'll update that chart when I actually enter the trade. Okay. So all of this gets built out on Sunday so that during the week, it's pretty quick. During the week, I just have a short list here. I've got them already put into my trading log, right? And so during the week, I have an hour allocated. Most of the time, I spend about half of that just checking these, and the other half I spend day trading, right? Um, so I have an hour booked out every day, Monday through Friday. I don't trade on Saturdays at all. But Monday through Friday, I go through each and I go, okay, has it fired? Has it fired? Has it fired? Has it fired? Right? And most of these are going to be set up on the 4-hour charts, right? Because that's my primary trading uh, time frame. So I check for each of those, and if they fired, then I put the trade in. I mark the in my trading log that the date and time I opened it, what price I got it at, and which is probably already in there, honestly. If I have a bid working, then that's going to be in there. If the trade fires and I put the bid in, then I'll put the bid into my trading log, but not the open date because I'm waiting for to get filled, and that way I can check and see what's been filled and hasn't been filled. That's also important because, hold on a second. It's also important to have those logged in your trading log when you have a bid in but it hasn't gotten filled yet, in a way that you can see them, because I might have a bid in, especially on a daily chart, for more than 90 days. And every 90 days from when I put the bid in, I have to refresh my trades. So one of the things I look at on Sundays additionally is, do I have any bids that have expired, right? Do I, oh, thank you for the bless you, appreciate it. Um, do I have any bids that have expired or that are going to expire this week? And I can see that by going through, and I can see how that is, like when I'm looking on my Thinkorswim platform. I can see when the order was put in, and then I just need to kill them and replace the order to make sure that it stays working, right? So that lets you track that. Now it's a similar time frame on most of my as far as how long orders down for most of my like planting flowers trades, either in stocks or in crypto. The crypto exchanges have their own. Here's how long we'll hold a trade open for. Some of them it's 30 days. For some of them it's 90 days. I don't know of any exchanges that'll hold an order longer than 90 days on crypto. Um, but do the same thing. You know, if you have it on your trading log, then you can go back and say, okay, is that order still working? Do I need to put it back on? All of that stuff. So that maintenance is really important to do. We're just wrapping up, Brian. I was just giving an overview to my trading methodology, like how do I schedule my time and how do I spend time on it. So, all right, guys, any questions about that? I know I just went over a ton of stuff. Um, I'll probably wrap up here in the next 3 or 4 minutes. Um, but feel free to ask questions about any of this. I really see the value that I bring to you guys as being just as transparent as I can possibly be about how I implement these things that we teach at TRI, how I implement those in my trading practice. So ask me any questions you have about that. Um, for a couple of reasons, I don't like to talk about specific dollar amounts, like the specific dollar amount size of my portfolio or stuff like that. Um, but short of that, I'm happy to talk about anything at all that you might need clarity on about this process. So I'll give it a couple minutes here for more questions, but I think I'll probably wrap it up about 10:30 here, which is in about 3 or 4 minutes. So thanks, guys. I appreciate it. It sounds like this is having value for you guys, and that's great. That's what I'm looking for. So I'm glad. All right, JDC, go get some food. Thanks for joining us for this. Fantastic stuff. Good questions, everybody. Good questions from all of you. All right, guys. Let's go ahead and wrap it up. Have a great, fantastic week. Let's see, what are we studying this next week? This next week, we're going to get into the first of our momentum indicators. So, we're going to be looking at volume impetus. So volume impetus is how we do an overall study of volume using the OBV indicator, a moving average, and divergence and price structure, and the volume indicator as well. So it's an overall study that combines like 3 or 4 different things. They all need to be there for the signal, but I think you guys can find it pretty interesting, and it's particularly powerful because volume very often is. So have a great week. Please, office hours Monday, Wednesday, and Friday from 7 p.m. to 9 p.m. Pacific. Um, ask any questions you got. Please put them in the Q&A sheet. Track the answers in there. For the things that I've answered in this Q&A sheet that I don't have my text in red in, please go ahead and put my answer in here as well so that you have it for when you're studying for your final. It's going to be absolutely critical. Okay, guys? Have a great week, and bye for now.